Welcome back to this week's market update. Today is Monday, May 4th, 2026, and we'll jump right in. Stocks continued their climb last week as a strong earnings season supported the rally, even as inflation pressures have been edging higher. Last week's economic data reinforced a solid macro backdrop with resilient economic growth and low jobless claims helping it to offset some of the inflation concerns. As of Friday, May 1st, the Nasdaq Composite led with a 1.1% gain for the week, followed by the S&P 500 up 0.9 and the Dow Jones Industrial Average up just over 0.5% last week. Moving into the week's economic data, the Federal Reserve's preferred measure of inflation moved higher in March, reflecting growing price pressures from the energy sector. Headline PCE inflation rose to 3.5% year over year, while core PCE, which excludes food and energy costs, increased to 3.2% year over year. On a monthly basis, headline prices rose 0.7%, while core prices increased a more moderate 0.3%, with the data largely in line with expectations, but clearly reflecting the impact of higher energy costs. Alongside the PCE inflation report, we also get some really good data on personal income, spending, and savings. This time for the month of March here. It showed that personal income as well as disposable personal income, which is an after-tax figure, were both up 0.6% in the month here. However, that was outpaced by a 0.9% increase in personal spending, which drove the personal savings rate lower to 3.6%, extending the recent downward trend and suggesting that households are drawing more heavily on their current income to support their consumption. Also last week, we got the advanced estimate of first quarter real GDP. It showed that real GDP grew at an annualized rate of 2% in Q1, slightly below expectations of 2.2%. Growth was broad-based, driven by business investment, as well as higher exports, higher government spending, and higher consumer spending. On the other hand, a higher amount of imports subtracted from real GDP during the quarter. Even with the slight downside surprise, the report reflects a stable expansion supported by balanced contributions across most components of economic activity. As you can see, 4 out of 5 on this list here contributed to growth during the quarter. Also last week, the Conference Board's U.S. Consumer Confidence Index edged higher in the month of April as a decline in the Present Situations Index was offset by a slightly stronger increase in the Expectations Index. Under the surface, weaker assessments of current and expected business conditions were offset by improved perceptions of labor market conditions and income expectations. By demographic group, optimism remained highest among respondents under age 35, while those 55 and over reported the lowest confidence levels. Overall, though, you can see we still are in a multi-year downtrend in consumer confidence, and other indexes like consumer sentiment would reinforce a similar view. So overall, we are below the trend, the long-term trend here. Slight improvement in the month of April, though. Last but not least, labor market data remained exceptionally firm in recent weeks, with initial jobless claims falling to just 189,000 for the week ending April 25th, a decline of 26,000 jobless claims from the prior week, and it's also the lowest reading since 1969. While revisions could move the data higher, the magnitude of the weekly decline remains notable, particularly given the rarity of sub-200,000 readings. The data continues to reinforce the low hiring, low firing labor market, where hiring activity has moderated but layoffs remain relatively low. This upcoming week, we will be getting the April jobs report on Friday, and so that will be critical to watch to see if this trend may continue or if conditions change in the labor market. Thank you so much for tuning in to this week's market update. We look forward to seeing you again very soon. The information you have heard is the view of Synergy Asset Management as of the date of publication. These views and opinions are subject to change without notice. Investors should not act on any recommendation, express or implied, or information in this material without obtaining specific advice from their financial advisors and should not rely on information herein as the primary basis for their investment decisions. Information contained herein is based on data obtained from publicly recognized sources and is believed to be reliable and is not expected to be updated after initial publication. This information has not been independently verified, and Synergy makes no representations or warranties as to its accuracy. The material has been prepared solely for informational, educational, and market commentary purposes and is not a solicitation of advisory services or an offer to buy or sell any security or to participate in any trading strategy.